It's about that time of day again. My name is Joseph. It's Thursday evening, May 25th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and DAX tonight. Crude is bearish and hunting for last week's low, but a wedge on the chart is telling us to watch for a two-legged correction to sell high tomorrow. The S&P is bullish with a spike in channel, but a measured move is standing in our way. So the plan is to look for buying opportunities back at support levels below on Friday. Gold is range bound and sitting right on top of the prior week close, so the plan is to focus on failures, selling high, buying low, and avoiding the middle tomorrow. Euro's range bound with a bear bias, so the plan is to sell above the highs using the 2-try rule. And the FDAX is range bound, so the plan is to buy low, sell high, avoid that middle, and focus on failures as we finish up the week. We have a holiday weekend just a few hours away, but that's not going to stop us from putting together a great plan for Friday's trading session. Got a great newsletter in store for you guys and gals tonight. Thanks for sticking around with me ahead of this Memorial Day weekend. Got the kickoff of summer here just a few hours away. Before we jump in, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come join me on the blog here at Sideways Markets, and while you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, lower left-hand corner, plenty of different ways to follow me on social media, and I'm always posting important charts, links, and updates throughout the week on my many social media channels. Grab those charts right below the video tonight, right where it says click here to download today's charts. How easy is that? All the charts from tonight's video, they are available for download right below the video on our blog. Don't forget to grab your free pass, upper right-hand corner. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. If you're not an advanced member here at School of Trade, grab that free pass. Come join me as a guest in the trade room. And please don't forget, if you're brand new here to the SOT community, we got a great frequently asked questions page, and I'm always here to answer all your questions. Hit me up on the live support tool on the right-hand side of the website. Boy, what a week, what a week. Bit choppy, right? Bit chaotic here as we go into the end of the week, end of the month, coming right around the corner. Tomorrow is Friday, May the 26th. So let's check the calendar here for tomorrow. The most important thing for tomorrow is a Friday, so it's always early in, early out. But this is not just your average Friday. We have Memorial Day holiday on Monday. So Monday is a holiday. Markets are technically open. You will see them open on Monday. They're not completely closed. There are some holidays every year, right, that are completely closed. According to the CME website, right, they will be open though on Monday. It is a holiday in the U.S., and it's not your typical holiday. This is the kickoff of the summertime season in the U.S. Not the official start of summer yet as far as the calendar goes, but everybody pretty much marks their calendar for Memorial Day weekend, and that's pretty much the kickoff for summer. So this is a pretty fun weekend here in the U.S. Lots of folks will be taking off early tomorrow, and lots of folks will be coming in late on Tuesday, right? Next Tuesday. Now, we'll talk about this. We'll talk about the plan on Tuesday night's newsletter for next week as we go into the end of the month next week. But be aware, tomorrow is a Friday, so it's already early in, early out. But with it being the holiday weekend Friday, we do expect tomorrow to be a significantly lower volume. And again, early in, early out. Anything after 10 a.m. tomorrow morning, you need to have a very high level of suspicion, right? Because unless we have a good reason to be trading after 10, 10:15, 10:30, I would expect after 10 a.m. tomorrow morning, the volume starts dropping pretty significantly. So get to it early, right? Get to it early, get out of there early, make your money, right? Grab your trades early, and then get out of here, right? Fire up the boat, fire up the barbecue grill, right? Grab the family and friends, have a great, great holiday weekend. So early in, early out tomorrow. On Monday, if you do choose to trade on Monday, again, the markets are electronically open in the U.S., so you will see them moving. It should be very, very careful, though, because there is going to be much lower volume on Monday. We're back in the action, normal schedule, of course, right on Tuesday after the holiday weekend. Tomorrow, as you can see here, we do have some pretty good news here tomorrow morning. Durable goods orders and GDP at 8:30 a.m. That is exactly what traders need tomorrow to get this market market moving early in the session. There's nothing on the calendar in Europe overnight here tonight, so it's really all based on tomorrow morning's durable goods and the GDP number at 8:30 a.m. Eastern Time. Shouldn't be surprising anybody, those two numbers. We're expecting soft numbers on both sides of those numbers tomorrow, but again, it should be enough to kind of keep the mojo flowing, right? Keep the juices moving here in the on the exchange and get things moving for you guys early tomorrow morning. So early in, early out after 10 a.m. Normally I say after 11 o'clock, but after 10 a.m. you really want to have a good reason, right, to be pushing those buttons tomorrow. You're more than welcome to hold positions into the close, but be very, very much aware, right, the end of the month, end of the week is right here, right now. Holiday weekend, traders will be taking bigger risks, and when you compare, when you include the fact there's lower volume in the market, it becomes a recipe for disaster. So make sure you trade carefully for tomorrow. Now, speaking of tomorrow, how about we put a plan together, shall we? We got crude, S&P, gold, euro, and we'll wrap up with the FDAX tonight. We got a bunch of ranges on the chart. This is pretty much as big of the move you're going to see tonight. We got a lot of ranges tonight on the chart. Starting off tonight with crude oil. Crude is bearish with a wedge this evening as the sellers try to retest the prior week low. Boy, I'll tell you, it's amazing how far this market has moved in less than a week. That's the prior week low at 48.08. Weren't we at like a gajillion like just 2 days ago? It seems like when OPEC started talking about this production cut, which was clearly rejected today, obviously, right? But it's amazing how far this market has gone in just 1 week's time. It seems like this week's been lasting forever, right? But it really started off going up into the low 50s and then come crashing back down here after we heard from this pathetic announcement this morning from OPEC. The bottom line is the bears had a real strong run lower, but this wedge is getting really narrow, so the plan for tomorrow is to look for selling opportunities up at resistance levels overhead for a target going back down to that low. I think the most important clue right now is the fact that we have this strong move down, and you kind of notice how it's kind of grinding lower here right now, right? It reminds me of a spike in channel. It reminds me of a wedge. It really doesn't, nothing really kind of fits for it. You know what I mean? There's not really a channel here. This really isn't a very good long-term channel, you know. We've got overhead resistance coming down on this, but you can tell this market was really dominated by news because, you know, they didn't even get a double down today. It's just, you can just kind of tell. The market there wasn't really a lot of rhyme or reason in the market today. It was just sell it. The funny part was we spent most of the time this morning, right, before 11 a.m. in buy zone, right? It was a spike in channel. This is a 12,000 volume chart, right? But the most of the meat and potatoes here in the U.S. session this morning were bullish until after 11 o'clock, right? And the bottom fell out of it, and we kind of had this low volume run lower here, right, to finish off the session. So call it a spike in channel if you want. You're more than welcome to call it a spike in channel. You're more than welcome to call it a wedge. I have it marked up here as a wedge just because of the lack of really any other option for it. It isn't looking a spike. It's just a spike down, spike in channel, spike in wedge. It's not a spike in range, that's for sure. It's not a flag. So spike in channel, spike in wedge, and anytime we have a spike and a wedge or a spike and a range, we now want to start looking for those prior swings, right? All of these prior swings, in fact, I should probably mark these up as well here too. They're not the major swings, but that obviously right what we're looking for as well. So really the goal for tomorrow for crude traders is just avoid selling low right now. The market's really, really low in comparison to where we've been earlier on this week. Like I said, there's the prior week low right there. So the ideal situation is to get this price up, and so we can sell it back down. Now, I'm not really, you know, obviously I would love to use this trend line, right? I'd love to use that resistance trend line overhead, but it's not really required at this point. It's just get it up, find those prior swings, find some area of resistance. Heck, there might even be a trend line drawn across there we can use, right, as resistance as well. So we want to get it up off these lows, right, get it up into levels of resistance so we can sell high tomorrow. Now, there's a couple different ways this could happen. First, it could go up, trap high above that 29, okay, that's the most aggressive. It could go up, right, up, pullback fails, buyers try to buy the pullback, they fail, right, back down again, very similar to what we saw right there, right, buyer failure, those are very similar there as well, right? Buyer failure above that high. That will be an example of that, right? Or of course, right, one of the more common is going to be a two-legged pullback, right? Two-legged pullbacks are usually going to be the case when it's a deeper correction, right? Two-legged pullbacks meaning, right, one leg, two leg, and then of course selling back down again. So the goal for tomorrow is sell high, don't sell low. What if the price goes lower here though? You know, we haven't reached the double down. We haven't reached the prior low. We'd love to get it up so we could sell it back down again. But hey, look at the market, right? It could easily keep grinding lower here. What if it grinds lower? If it grinds lower, a lot of times as we go into these major objectives, double downs, prior week low, wedge target down here, we get these kind of spike in ranges. We get these ranges down here. And what you want to be thinking is rather than selling into those lows, try to wait patiently for price to go up so we can then sell it back down with a failure. Failures are great for when the market hits that low, right? So as it's going lower here, rather than selling into that low and trying to chase after it, to wait for that trap high, wait for that break higher, right, and sell that sucker right back down again. Just don't take the bait, right? Just don't chase after it as it goes lower. And this includes even if it just keeps rolling lower here, right? It keeps rolling lower. Just wait for it, trap high, back down. Because trust me, a lot of other traders are going to be waiting for it as well. Right now, a lot of this move lower is undoubtedly just the buyers who thought they had one more chance to pick a bottom. They're now exhausted and they're basically, right, getting out of these positions for losses right now. For some reason, anytime people hear about OPEC right now, they think we're going back to $1.25. It's highly unrealistic right now, and it's not a reliable way to trade is try to call these bottoms right now. So all of these big moves lower are just there, you know, I'm sure it's probably 20-30% of it is aggressive sellers, but I'm sure a lot of this sell-off here today was just buyers hearing on Monday about a 9-month production cut, and then here on Friday morning finding out it was just an extension of the current cut. There's a big difference there for what they told us today and what we heard about on Monday. So a lot of buyers, I'm sure, right, are being forced right now, kind of pinched right now, and are trapped and have to get out. So stay focused, sell high, resist the temptation to sell low, and again, early in, early out tomorrow, right, on that crude. Let's keep going. How about some S&P? S&P's bullish with the spike in channel, but this measured move is telling us to avoid buying into resistance and look for buying opportunities down at the low of this possible range tomorrow with a target going back up to retest the high. Now, one thing that stands out on this prior week high, right? One thing that stands out here is that prior week high at 04.5, which will definitely act like a price magnet. That prior week high at 04.5 is such a big pullback, right? If we do make a run at it, it will definitely give the sellers a chance to reverse this trend and maybe head all the way back to that 2400 tomorrow. It's obviously we're bullish right now, but this prior week high, and you'll see a lot of these as we go forward. The next 3 charts have a lot of these prior week levels on them. As we go into the end of the week, last week's levels become important. As we go into the end of the month, last month's levels become important. So we get the end of the week tomorrow, and the end of the month is coming right at the, Wednesday next week, right? 31st is Wednesday. So we want to keep an eye on those prior week highs and lows, those prior month highs and lows. Of course, that prior week high is down there at 04, right, 04.5. Now, that right now is still kind of a pipe dream here for the sellers. I have this tonight as a spike in channel, spike up, and channel out. And whenever we have a spike in channel, what do we always look for? Traps, right? Traps. Find that prior swing and buy that dip, right? Buy that dip. Remember, a spike in channel is a great pattern, and it basically tells us look to buy low. A spike in channel starts off with a spike higher, and with that spike higher, inherently now you have to buy high, right? You're buying at the end of that spike. Now, obviously, as the spike in channel develops, right, we're looking to see price continue, but now we're starting to see some topping up here, and you can see why. The measured move right at that 15.5 area. So the measured move is making for great resistance, right? And it's also reminding us now, not a big deal, The buyers don't want to buy high. Let's buy that pullback, right? Let's get that deep pullback into this area between 10 and a quarter and 06 and 3/4 here. I'm kind of playing with this little triangle here we had earlier on today as the support area. It's kind of a guess at this point at 06 and 3/4, but this will give us an easy area to look for the buy. So buyers right now would love to see this price pull back into that buy zone, that green rectangle, right, that I have marked in the chart. And of course, the objective will be to go back up and retest that high. Now, I also have the measured move. 1, 2, 3, that measured move at 20 and a quarter, right? That will be in play as long as we don't break. It has been. I hope you guys learned something. I hope you earned something this week. Don't forget, if you want to learn more about how we trade, what we trade, why we trade here at School of Trade, I would love to tell you all about it. Join our free trial on the homepage of the schooloftrade.com website, and that will give you all the details. While you're here, don't forget to ask me questions if you have them. I got live support on the right-hand side of the website, and we've got 3 levels of membership to make sure that everybody has a place to call home here at SOT. Whether you're brand new or you're a grizzled veteran, I look forward to working with you here and sharing these strategies, right, and our success with you as a client as well. Have a wonderful, wonderful holiday weekend. Careful tomorrow on Friday. Enjoy the holiday weekend. Make sure you come back on Tuesday with all your fingers and toes, right? Be well out there. Enjoy the time off. It's these times away from the desk during these long weekends, right, that refresh and refocus so we're ready to kick some butt as we go into the end of the month. But at the last couple days of the month of May, at the beginning of next week, we always expect to see increased volatility. I look forward to seeing you there. We open up our trade room at 8 o'clock Eastern time. My name is Joseph. Great job this week. Adios, amigos. Bye-bye.